When it comes to crowdfunding, the real question is crowdfunded real estate worth it? And you know, it's an interesting thing because crowdfunded real estate is a $13.9 trillion market. It is massive. Many people are doing it. There are over 1,000 companies offering crowdfunded real estate. The main advantage of crowdfunding is pretty obvious, but here we have a quote from Investopedia, and they put it by saying one of the biggest advantages of investing in crowdfunding for real estate is that investors can commit far lower amounts of capital toward any single property, sometimes as low as $500 or $1,000. And of these 1,000 or so companies out there offering crowdfunded real estate, some of them offer an investment entry point as low as $100. Now, some examples are companies like Fundrise, and another one is Realty Mogul, and they are big in the market. I know one of them is taking in $60 million a week. So there are many benefits of crowdfunded real estate. The first one that we've already touched upon is that you have access to the real estate market with small amounts of money. In other words, if you would normally have to accumulate, say, $50,000 to have a 20% down payment on a home, that could take you quite some time. Whereas with crowdfunded real estate, even if you have $500 or $1,000, you can invest that in a property. That is a tremendous advantage. You don't have to wait until you've accumulated a down payment for an entire property on your own. Advantage number 2 is you can choose in which real estate projects you want to invest your money. So you can have it spread out over a number of properties and say, I want it in residential or I want it in commercial. Again, you don't have to wait until you have an entire down payment for an entire commercial building. Which brings us to advantage number 3, and that is that you've got a lower investment size in any single project. So thinking again of our single family home with a $50,000 down payment, it will take a while to accumulate that, and that $50,000 goes into one property. Whereas that same $50,000 could be divided into 50 projects where you put $1,000 each into them, and now you've got a spread of risk. In fact, you might choose to have a few houses, but also a bit of commercial. And the commercial might be spread amongst a bit of office space, a bit of retail space, and a bit of industrial, and a bit of storage space. So you spread your risk, and you can learn about these different sectors instead of just having all your money in one house until you have another deposit for a second investment. Now, to be fair and balanced, we also have to look at the disadvantage of crowdfunded real estate. And the main disadvantage is that the risk of investment default tends to be higher for crowdfunding compared with peer-to-peer or direct real estate investment funding. And that's generally the case when you've got a group of people looking after an investment, because usually if they think it's a really, really good deal, they might try to do it themselves. So what's left for the REIT or for a crowdfunded deal often can be something that's second tier, if you like. And as such, the risk of default can be higher. However, the main disadvantage of crowdfunded real estate is a lack of liquidity. And again, this comes from Investopedia. Unlike stocks, you can't sell your shares. You can't sell your shares in a crowdfunded company. Now, the definition of a liquidity is quite clear. Again, this comes from Investopedia. Liquidity refers to the ease with which an asset or security can be converted into ready cash without affecting its market price. And I know some of you are thinking, hang on a minute, Dolf, if you buy a property in your own name, you use that $50,000 cash as a down payment, you get a mortgage from the bank, and you buy that property, it's not very liquid either. But the truth is, if something happens with the property, if it goes up in value, you can access that equity by going to the bank and refinancing. So when you buy property in your own name, it is relatively liquid. Whereas when you have money invested in a crowdfunded project, often you have to commit to investing it for a minimum period of time. Typically it's 5 years. And therefore you cannot get your cash back very easily. And should you have some kind of family emergency and you really need the cash back, there are usually provisions where you can sell your investment to another investor in that crowdfunded property. But then the challenge is agreeing with that other investor what the price is, what the value is. In general, the liquidity is not very good with crowdfunded real estate investments. So the third main disadvantage of crowdfunding is that it can be less lucrative than doing it on your own. management often takes all the big money. And this is the same thing that afflicts REITs or real estate investment trusts. Because they're effectively run by a committee, you get the benefit and the disadvantages of having it run by a committee. In fact, if there's a lot of profit to be made, if they find a property that they can buy for $1 million, but it's actually worth $3 million, I don't think it happens very often that they tip that with all the profit into the crowdfunded real estate deal. Sometimes they'll take a lot of that for themselves first or just do the deal on their own. Having said that, it is still often worthwhile to get involved in crowdfunded real estate. So, as to the question, should I crowdfund? Again, this comes from Investopedia, from Julian Hellman. She's the CEO at Realty Mogul. Realty Mogul is one of the 2 big crowdfunded companies in the United States, along with Fundrise. And she says, first, work with a crowdfunding company that will survive. That means well capitalized. What scares me is the number of crowdfunding companies out there that are headed up by 2 students who just graduated from college and who aren't capitalized themselves. Remember, there are over 1,000 crowdfunding companies out there. You've got to make sure if you want to go down this route that you choose one that is going to survive in the long run. In summary, the pros of crowdfunding are that you can invest less money. Remember, to buy your own property, you may think you need $50,000 cash to buy one property, but that same $50,000 cash could be spread over 50 investments where you put $1,000 into each of them. Or if you don't even yet have $50,000, you only have $3,000, you could choose to put $3,000 into a crowdfunded deal or put $1,000 into each of 3 crowdfunded deals, and you're spread over 3 properties and maybe even 3 industries: residential, commercial office space, and commercial industrial. The main disadvantages are that you tend to make less money in percentage terms, and you've got a slightly bigger risk. And the reasons for that, remember, are that usually there's a committee involved in making decisions. And as soon as you delegate anything to a committee, it takes longer to decide. People don't generally agree very easily on things, and you tend to get the average result. So there you have it, the pros and cons. The question becomes, what are my alternatives? The main alternatives to crowdfunding are, number 1, this is the conventional way of buying real estate. You find your own deals, even if it's a $120,000 property. And this is what most people do most of the time. You accumulate a down payment, you use that along with the mortgage to buy the property, and then you sit on it for a long time. Now, in case you want to get started before you have, say, that $50,000 down payment, or if it's 20%, it would be more like $25,000 here. If you want to get started in real estate, one of the things you can do is option 2, which is to use other people's money and other people's credit. There are always people who have more time than money, and always people who have more money than time. So if you're one of those people, you don't have much cash, but you've got the time to find great deals, go out and find a great deal and present it to someone who's got money but no time, because very often they'll be keen as anything to be involved in a project where they can put up their money and you've done all the work for them. And a third alternative is to use other people's deals and other people's track records. They've already got the deals, they've got the track record, they just want a bit of contribution from you and you can partner with them. So there you have it. They are the alternatives to crowdfunding. Crowdfunding is a great solution for many people. You can use small lumps of cash to get into real estate, but there are alternatives that may work better for you. There you have it, the pros and cons of crowdfunding. It can be beneficial for many people. It is a massive industry. For me personally, I'd rather do a deal myself because no one looks after my deals as well as I do. Everyone has a vested interest in their own things more so than other people's things. And when you do buy a property, it's time to get this book. Chris Crone and I have come out with a new edition of it. You can get your free copy by clicking on the link below. It will give you a myriad of ideas as to what you can do to increase the value of any property without spending much money. Well, thank you for watching. Everyone's on a different path towards financial freedom through real estate, and I hope this video answered your questions on crowdfunding. Now, if you're interested in knowing the relative merits of residential versus commercial, watch one of my previous videos, and don't forget to get my free copy of this book by clicking on the link below.